Greetings, this is Renee Isuk with ProsperLink Tax Group, and you are watching the 2-Minute Drill. I want to spend a few moments discussing a real estate strategy that may actually be useful, more so for those high W-2 wage earners. And this strategy has been coined as the short-term rental loophole, outlined in Internal Revenue Code 469. Generally speaking, any real estate activity under IRS regulations is considered a passive activity. And with a passive activity, any passive losses can only be deducted against passive income. But this short-term rental loophole allows you to actually treat a real estate activity, if it qualifies, as a non-passive activity. Hence, any losses in that activity can actually be deducted against or offset your W-2 income. So there are three things to consider to potentially qualify for this short-term rental loophole. The first thing, or I should say the first test to consider, is whether or not your short-term rental will actually fit the 7-day test. The 7-day test basically says that your rental stays on average are 7 days or less. If you can prove that and document that, you could qualify your short-term rental as a non-passive activity. The second test to think about is the 30-day test with significant services. With this test, if the average rental stay is 30 days or less, and you provide significant service like concierge, breakfast, linens, beds, utilities, things that you would get in a hotel, you could potentially qualify your short-term rental as a non-passive activity. And then the last thing to consider is material participation. Material participation basically means that you are participating in the daily management of this short-term activity, this rental activity. And essentially what that means is that you're putting in at least 100 hours a year on this particular activity, and no one is putting any more work than you. Now, in another segment, I'll talk more about material participation because it's not clear and cut. But if you can prove that you are a material participant in your short-term rental activity, this too can potentially qualify your short-term rental activity as a non-passive activity. Again, in another segment, we'll talk more about material participation. But until then, take care.